You're watching Masters in Trading Live with Jonathan Rose.
Hello, dear friends. Jonathan Rose here. Welcome to Masters in Trading Live. If I'm a little off kilter, I feel like I got smacked in the head with a stick this morning. I'm all flustered, but I'm right back with you. We got 4 topics. Actually, before we get into the topics, let's talk about the week. July 4th week, Wednesday, half day in the market. We're going to do Masters in Trading Live on Wednesday. On Friday, there's non-farm payrolls. We're going to be closed. There will be no Masters in Trading Live on Friday. So Wednesday, a half day. Thursday, July 4th, the markets are closed. Friday, the market's open, but we're not going to be doing a Masters in Trading Live. Let's talk about 4 topics we got today. The first one is going to be non-farm payroll. Non-farm payroll is unemployment. What is that? That's a catalyst for movement. Let's talk about some community insights. Third, there was a $60 million trade that I want to go over. And then the final topic is going to be a divergence in natty gas. Let's go to the slides. All right, the first thing we want to do is look at the calendar. This seems like straightforward, but it can really, really help you. Trade the calendar. What we mean is, get my slides here. What we mean is Wednesday, half day. It's going to be a slow day. Thursday, the market's closed. So today, Tuesday, if you buy options, options decay. Options will decay on Wednesday, on Thursday, on Friday, on Saturday, on Sunday. We want to be super careful buying options. Don't buy options today. Don't buy options today. Don't buy options tomorrow. Maybe at the end of the day, we could consider some options that expire on Friday for non-farm payroll, but I'll be talking about that in our earnings class on Wednesday. Let's talk about our Discord room. And in our Discord room, I want to go over some community insights. Bradley sharing some love. JR 100% honest about what he brings from the trading floor. A lot goes back to specific things he has learned and chooses to pass on because of the junk education that's out there. So I want to go over 5 important things that have been learned in the Discord. Starting with 1, tranching. We want to work slowly into our positions. Break your trades into smaller parts. Okay? This is a conversation we're having in Discord just this morning. Whenever you're buying options, figure out how much you're comfortable risking. If you want to buy options, and let's say you want to do a trade in ticker symbol Big Bird. Okay? It's not really a ticker symbol, but if you wanted to do a trade in ticker symbol Big Bird, and we want to do this in 3 tranches, we're going to risk $300. Then you risk $300. Then you risk $300 or $400. Okay? You decide what you're comfortable getting in before you get into your trade. If BB goes against, you're going to lose money. When you buy options, you're going to lose money maybe half the time. That's trading. So tranche into your positions. Slowly get in and know what you're comfortable risking before you get into the trade. You can never lose more than you decided what you wanted to bet. Patience. Don't get out of trades because they go against you. I like to say the market, it's not real. And what I mean by that is there is just supply and demand that happens over the course of a week. So if you're long and your stock goes down, don't get out. That might be a buying opportunity. Look at it as an opportunity. Stick with your trade. Be patient. Next, slow down. I've definitely noticed that if I say a name that I think is going higher or lower, everybody just immediately goes and tries to put the trade on. Patience. You're not going to miss out on any really good trade. Okay, again, the market ebbs and flows. That's why it's so important to learn. It's so important to be confident, because you need to be confident to stay in these trades. Fine. Fourth, maintain a mix of some longs and also some shorts. This way you don't care if the market goes up or down because you have exposure on both sides of the trade. And then finally, and working at a proprietary trading firm, this was the biggest thing that we looked for. And it's going to surprise you. Self-awareness. Being aware that, you know what? Maybe you don't have all the answers. Maybe you don't completely understand what you're doing. And if that's the case, de-risk, paper trade, ask questions, be open. Okay? Know what you don't know. The cost of ignorance is really, really high. So to sum it up, tranche, slowly work in your positions. Position management is more important than finding trades. Slow down. Stop feeling like you're going to miss out. We want a balance between longs and shorts, also long volatility and short volatility, and then have some self-awareness, guys. There's a lot to learn. If you're not comfortable, just take it slow, have self-awareness. 5 community lessons. Let's get into Advanced Notice. Advanced Notice is our unusual option activity tool. This morning, and these are the results that we found this morning from July 1st. We get intraday data on our Advanced Notice tool, but I want to highlight this because this order is gargantuan. ANSYS, ANSS, about $60 million traded. This is a monster trade. Now again, don't rush into a trade. Slow down. It's Tuesday before July 4th. We don't want to buy options. This was an enormous trade going out 200 days. Now, the thing with this trade, why I don't love it, is ANSS actually didn't really move after that trade was done. Let me just check on a different computer if that stock's moving now. Yeah, it's not doing anything. So last trade 322, as much as this was a big order, and you could see the order right here, volatility is so low, 30%, and the stock didn't move. So this trade is a big nothing burger. Let's do nothing. It's a $60 million trade. They might have done it for margin. I'm not sure why they did it, but the trade really didn't move. The underlying really didn't move. So it's a no trade. Don't do anything. Sometimes unusual option activity, it's just noise. This one, in my opinion, it's just noise. Finally, divergence trade. And this one's really cool. 2 names, LNG and then EQT. These are 2 names that are in the natural gas sector. Okay, very correlated, right? Trading together, they break apart, they eventually come back together. And look, right now, LNG is rallying, EQT is falling. What does that mean? Well, let's go here. So again, we have LNG right here, EQT down here, but then I also put on natty gas. The yellow is going to be natural gas. Both of these are correlated with natural gas. Natural gas, I'm going to highlight the line here, rally, then fall. Okay? So natural gas is falling. EQT is falling, but LNG is rallying. That's weird. Let's go to the next chart. Natural gas, boom, EQT. EQT following along with natural gas, right? What do we know about the other one? LNG. LNG rallying while natural gas is falling. So this is a divergence trade. And the divergence comes with the LNG and with the EQT. On the all access portion, we're going to talk about our LNG position because we have LNG, and this morning we are covering our LNG position. If you have not had a chance yet to watch our earnings presentation, mastersinTrading.com/earnings. For everybody who's part of our Earnings Advantage program, we've been doing this exactly the same since 2015. It's rinse and repeat. It's like clockwork every single time earnings comes around. For everybody in our Earnings Advantage program, at 1 p.m. Eastern Time tomorrow, we're going to have a live class, a live search party class, go over exactly how we trade earnings and see what we can find. For everybody else, see you guys back tomorrow, live, 11 o'clock Eastern Time.